This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Welcome back to Benzinga Live. Happy Monday. Market doing well, at least for 2022 standards for sure. The S&P 500 is up at this point almost 2.5%. Wow. So no, it's just a good day regardless. Any day this year, stocks are in the green. Seems like a great day. But today, it would be a great day any year, any time. S&P 500 up almost 2.5%. Like I said, the Dow Industrial Average is up about 1.6%. And your NASDAQ Top 100 QQQ up more than 3%. So all across the board, the breadth has just been absolutely incredible today. We can go break it down by sector as well and see that I'm pretty sure, at least last time I checked, every single industry, every single sector was in the green. Yes, that's still the case. Real estate up 4%. Financials up almost 2.5%. You had Bank of America report earnings this morning that were positive. So, I mean, you know, who's to say if this is a good sign or indicative of strength coming back to the market, or just a green day of part of a bigger red market and a bear market rally that we should be fading? Time will tell. I certainly don't know. I could see it either way. I think you could make a strong argument either way to say, like, hey, a lot of the bad things have already been priced in. There's no really reason to go lower here because it's we know the Fed's going to continue to raise rates. We know companies are getting ready to report earnings, and the consensus is that they're probably not going to be great. And like we've already seen with Bank of America, like with that bar set lower, we're going to have companies that beat. And we saw that last earnings report or last earnings season too. So, you know, we do have some big names to report this week. Of course, Netflix and Tesla, two of the biggest that I'm watching, but also IBM, Johnson & Johnson. We'll go through a full list of those names. Let me go ahead and pull up my Benzinga Pro. Yeah, as you guys can see here, we're definitely, you know, changing weather, changing seasons here. We're getting into fall, getting into where it's going to be a little bit darker, potentially a little bit more gloomy, hopefully not, but it's certainly looking that way. All right, hold on. Let me know how everyone's weekend was. Let me know what you guys in the chat. What'd you guys do? Obviously, we're not trading stocks over the weekend. You can trade crypto, but outside of that, I know I did a little bit of sports investing, some gambling on my DraftKings app, as well as my fantasy football teams. We can talk some NFL if people want to. We can talk some fantasy football. MLB playoffs going on as well. We had NHL start up, NBA. What did I say I was going to check on my Benzinga Pro? Or something I said I was going to look at. I forgot what it was. I mean, yeah, Tesla getting a nice bounce here, up almost 7%. Aloha, Patrick Kanoy. You joining from Hawaii? I'm jealous. Buglog changed focus to investing in crypto. Hey, man. Whatever works. How's Johnson & Johnson looking? I mean, this thing, if you want to talk about a safe stock, look at this thing. Going back since the last recession we were in, 08, 09, this thing's just been a monster. Obviously had a COVID dip, came right back up. It was making new highs. Making new all-time highs in Johnson & Johnson as recent as April 2022. So just 6 months ago, this thing was making new all-time highs around 185. Sold off a little since then, but I mean, this thing's a staple. I wonder what the dividend's like. Dividend yield 2.8%. How about the banks though? Well, let's do that. Maybe that's what I was going to come in here to check. Bank of America. Bank of America GAAP EPS 81 beats by 3 cents. Revenue of 24.5 billion beats by a whole billion. I mean, wow. So yeah, I don't know if they were expecting, sounds like they were expecting around 23.5 billion. And got around 24.5 billion. I don't know if that 23.5 billion that was expected was an adjusted number that was guided down from the 20, from a bigger number, or if that was the original expectations. But either way, whether you're beating that, revised number or the original number, you got to construe that as bullish. So you have all the financials today basically moving higher off this Bank of America. You can see that the Bank of America up 5.5%. A lot of the other consumer-facing banks, Citigroup moving higher, albeit pretty flat. JP Morgan up 4%. So if I had to name, or if I had to own any two names in this space, so I'll give you a few. So I like JP Morgan just because it's like the biggest. I think it's pretty. I don't know if safe's the right word. I guess it is. Like, I guess it's a safe stock relative to like a growth or ARK stock. But at the end of the day, stocks are speculative assets, and there's risk involved in them, inherent risk. So there's no really true safe stock. But I do like JP Morgan. It's a $300 billion company, one of the biggest banks out there. You get a decent dividend there, 3.6%. If we look at the chart, I want to say the highs were in like the 170s. Yeah, 172 up here back in November. And not to say that it has to get back there anytime soon. But typically with companies of JP Morgan's, stature, companies that aren't going to essentially just fold over, they typically return back to their previous all-time highs at some point. So from 115 to 170, that's a good little return right there. I also like Bank of America. I am biased, I guess, a little bit on here. I'm partial to it. I am a customer of Bank of America and just happen to like them. Like, I think they're one of those companies that I'm a customer of that I'm happy with. It's not like one, it's like you have your Wi-Fi provider, your cable provider that you're constantly having problems with. It's not like me with my bank. Me and my bank get along pretty well. That's not the only reason I like the stock. I think it's got some good value down here, but I just wanted to get that out of the way that I am biased on the stock. But I do like it. Again, you've got a decent dividend here. The financials look good. I mean, I don't think you can really go wrong with either of those, especially if you're talking about buying them for the long term. If you're talking about trading them, of course, they could go down in the next month or two if macro, headwinds continue to come, all these things. But for right now, I think if you're talking about owning these stocks for a year, 5 years, 10 years down the road, a lot of them are trading at discounts. Now, a couple other ones in the space, in the finance space, not really as much consumer-facing banks. Stifel is kind of more of a growthy play, kind of more of a smaller investment bank. Stifel is actually headquartered in St. Louis. I like Stifel. You can see here you've got a 1.3 price to sales, a forward PE of 7. I think this thing's got inherent value as well as good growth prospects. And then another one that I don't mind is Blackstone, ticker BX. You can see the chart here looks a little different. Way more growthy because it's like a lot of private equity, and they're buying a lot of companies that they're probably overpaying, or they probably did overpay. Blackstone did for a lot of companies, but just an absolute mammoth of a company. As well, $62 billion. It's a good way to get some exposure to the private equity world through a stock if you want to. But again, like the other names that we were looking at in the financial space, now that they've been beaten down a little bit, you've gotten some more kind of realistic valuations. You've got a good dividend here, 6%. the way Blackstone's like the company is set up too, the owners or like the shareholder, like basically we as shareholders, or if you are a shareholder, you get paid out more when the or the owners only get, you know, paid more if the stock goes up. So it's like there's like inherent value for the people that are running the company, or the people that are making the decisions in charge, to return value to the shareholders, because it's the only way for them to make extra money as well. Let's see. All about setup. JP Morgan was beaten up going in. Anything decent and it rallies. Yeah, I mean, yeah, that's basically that's the name of like all these stocks into earnings. There are a few handful of names out there that have actually still been strong, like relatively to the market. You look at an Ulta Beauty was making new all-time highs in September. We look at some of the clean energy names, the Enphase Energies, making new all-time highs in September. First Solar, FSLR, making new all-time highs in September. So you do have names out there that were showing strength against the market, but for the most part, a lot of these names you've got to realize, like if you're buying puts on Google, think, you know, ahead of earnings, thinking, oh, it's a lock that Google reports a bad earnings report or gives bad guidance. Just remember the stock's already down 50. Wait, is that right? No, a third. So $50 from 150 to 100, about 33% from its highs. You just got to remember, like, some of that is priced in. Some of these stocks getting absolutely crushed, it's the market pricing in that they know the next 6 months isn't going to be bad. So when the company comes out and says, hey, the next 6 months isn't going to be bad, or is going to be bad, the market's going to say, yeah, we already knew that. That's why you're trading down 33%. And the flip side to that is that the company says out and says, yeah, I mean, the next 6 months are going to be tough, but we don't expect it actually to be all that bad. And then the market's going to be like, oh, wow, we can really go out here and buy this. Damn, Patrick, I'm jealous. Hawaii is one of those places never been, but always wanted to go. Hopefully sometime. All right, let's see. Catching up on the chat. Ooh, Patrick's in Vegas. I'm double jealous. I'm jealous, A, that you're in Vegas. Jealous, B, that you're flying back to Hawaii. Other names reporting this week. Netflix, of course. How's the SPY doing, by the way? Are we still... Oh, wow. We're ripping. Let's go to some 5-minute candles here. Why is someone good with trading view charts? Like, what is this up with this purple? Is this the session? That might be what it is. Yeah, that's the session. So that's pre-market or like futures trading, or just extended hours trading, and then you open right here. Oh God, I'm so smart. Just kidding. All right, you got your S&P 500 trading, right in between $36 and $37. S&P 500, you can see we're right hanging out in this range. If you're looking to day trade the S&P 500, I always, and I'm not the best, or I would say most advanced technical trader. I don't use a lot of indicators. We can, put on like moving averages and RSIs and all that. But I often think that simplicity is like the best, and it's the most repeatable. If I were trying to day trade the S&P 500, if I were you, I'm not. But if I were you, and this is not financial advice, what I'd be watching to see is if we break this, if we break through our previous high a day. Because if we do, and maybe give it a little bit of leeway, because sometimes you'll see a double top where the second one is slightly higher, and then you might be like, oh, we took out the highs, time to buy by 1 cent. and then it ends up moving against you. So maybe wait like a quarter or 50 cents or so. And then once you get some trading above, or maybe a 5-minute candle closes above that previous high, I would see that as pretty bullish. If we get up to this level and reject, or don't even get up there and we're making lower highs, I would see that as an intraday bearish trend. And again, these are all, very things that can change on a dime, essentially, on depending on your time frame. But if I were looking to day trade the S&P 500, that's what I'd be looking at right now. All right, guys. Looks like Jake Wujastic from TrendSpider is going to join us. Let me go ahead and make sure he's got the links. All right, guys. Friendly reminder, too. First reminder of the day. Smash the like if you have not already. We're live here on Benzinga Live every day from 11:30 a.m. Eastern to 1 p.m. Eastern, talking about all the biggest news on Wall Street, all the biggest news that is on all the headlines that are moving stocks, as well as different trade ideas. So in order to reach more people, get bigger guests, all these things, we need to continue to smash the like. Much appreciated. Also, we do have a boot camp, Benzinga boot camp this Wednesday. Should be packed show with a bunch of different speakers. So getting those all, or getting everything for the boot camp set up right now. I'm excited for that. If you guys have never been to our Benzinga boot camp, you need to. It's your one-stop shop to really bring your trading to the next level. You can come in not knowing anything at all, really, and walk away. I'm not going to say you're going to walk away like a Warren Buffett, but you're going to at least know what you're talking about when it comes to both trading and long-term investing. Let's go full chart here on this S&P 5-minute chart. If you guys have any questions or any stocks you want to check out in the chat, let me know. Got about 163 people watching us right now. What other stocks you guys want to check out? How's Apple doing? Apple. I mean, Apple is up almost like it's up less than the SPY right now. Let's look at our names that are outperforming. Google up almost 4%. Netflix ahead of the earnings. I think a lot of people, right? Because if we go back on the daily chart here, we can see really where Netflix has reported earnings the past few quarters, and it hasn't been pretty. April, sometime in July wasn't bad. You didn't really get a big spike up. Let's see. Let's go to our calendar here. I think we just checked this. I'm having like deja vu. Yeah, July 19th. I don't think we did much there. July 19th right here. You can see a bigger volume day. So yeah, we went up about 5 or about 10% those 2 days. But really go back here, down 35%, big drop off here. Boom, boom. I think people are anticipating some sort of similar move, like this gap getting filled to the upside. And so I think that's the only explanation to know, or to guess why Netflix is up 7% today when it reports earnings tomorrow, is people willing to take on the risk, going out and saying, hey, I'm going to buy Netflix ahead of the earnings because it's due for a good report. Or even if it's bad, right? We've seen the stock get beaten up so bad that, you had value investors coming in and buying the stock at 180, that a lot of people are starting to like this stock. So I'm not surprised to see it up 7% today. Oh, wow. Looks like making some crazy move, right? Even just while we're talking about it, going up. Looking at it on 5-minute here. I mean, just ripping, making new highs a day. So this is what I was talking about. I was talking about with the S&P 500, but we took out the high of day. We're making new highs a day, but I'm not sold on it yet. And I'm okay. When I'm trading, technically, I'm okay. Missing out on some gains if I wait a little bit just to make sure the trend is really there. Because if we start trading down right now, I'm not going to say, oh, it's not a double top because it got above that previous high by a little bit. They don't have to be perfectly symmetrical like that. Obviously, if it goes up way higher, then starts coming down, you're not going to say it's a double top. But if it starts right here, but it looks like we're just moving higher. So maybe if we'll wait another minute, and if it closes higher, then I'll say, okay, now that's a sign to me that that's bullish. I mean, this whole day has been really good movement. And you can see here too, this is something that you haven't seen. Let's see if it's true for SPY 2 on the 5-minute chart. Whoa. Whoa. What's going on here? Why was there such a big volume in this 5 minutes? Someone have an explanation for me? You usually don't see that. Some like big block trade or something. Or maybe it's just a data F up. But going back to Netflix, you'll notice here on the volume where my cursor is down here on the bottom. You don't typically see this where volume starts going up right here around noon, like around lunchtime. You typically see volume kind of be on a steady decline after a certain point. All right, so let's see. It looks like we are getting a little rejection here. Oh my God, Super Spackman! I didn't even see you talking about this, and that's what I was looking at. I was waiting to see if we got a double top here on the 5-minute chart. That's crazy. So yeah, I mean, look, like if we can see where this wick got up to. We got up on this wick back at 10:30, up to highs of 246.50, hit highs here of 246.63. So did take out that previous high, but now moving lower. I'm not ready to like call a double top and go out and buy puts on this that expire Friday to try to play a move to the downside. A, because I don't really trade like that on charts typically. But B, just because this day's been so strong, I wouldn't be surprised to see a couple basically see this same formation repeat itself where we move higher, get a couple red bars, move higher again, get a couple red bars, keep moving higher. And really, hopefully, I'm hoping that's the trend we see on the S&P 500, where it kind of reverses, where we start making higher lows. We've been making lower highs. I want to start making higher lows now. I want to start getting back up here, rejecting, but then getting back up here. You know, a nice. I don't need to see complete V-shaped recovery like we saw in the COVID markets. You know, that was aided by historic stimulus and Fed cutting and all this. I don't need to see that from down here. I want to see kind of slow and steady comeback of the S&P 500, and it's fine if in 6 months from now we're still trading well below our all-time highs. I just want to start getting some of that positive momentum back. And who knows? Who knows if that's starting now or if we've still got a ways to go in the bear market. And you know, a lot of people out there, both investors and traders, keep talking about some capitulation point. We need to see the pain. Can you go over how to get the expected move after earnings? So a lot of brokerages, I know TD Ameritrade will give it to you automatically. I know there's like an easy way to calculate it using the options market and like the break-even prices. I honestly don't know off the top of my head. We can certainly figure it out together. Why is Schwab down? Banks are up, and it's a good question. The company reported earnings, so maybe the earnings just weren't as good as Bank of America. Because everything's relative, right? So they beat, which is good, but if Bank of America beat by like a decent amount, which I think they did, yeah, I mean, it looks like, remember, Bank of America beat by a whole billion. Looks like Charles Schwab beat by 90 million. So that's a big difference. I'm not saying that's why the stock's trading down or it should be trading down off a good earnings report. I'm just saying maybe that's why. Morgan Stanley stock, I think this one, you know, you can look at too. It's got a decent dividend, 4.1%. Pretty cheap right now, I would say. Price to sales, 2.5. So maybe a little bit expensive compared to its peers. Morgan Stanley is kind of a different. Yeah, Jay Rice in the option chain will tell you. go back, check in on our Netflix on the 5-minute chart. Yeah, so we did kind of get a nice little double top there for, if you were quick with this, probably could have made a few bucks, but again, I'm not really sold on that right now. Sorry, guys, just catching up on the chat. Yes, they get like money call and at the money put at them or something like that. I can't quite remember. Yeah, and that's the thing. That's what I was saying. I know there's an easy way to do it using the option chain. I just wasn't sure off the top of my head, and I didn't want to give you bad information. But like I said, I'm sure we can figure it out together. You're making me miss Spencer. He was good at that. He was good at figuring out the things. Although, again, TD Ameritrade just tells you. Alrighty. Super Spackman saying Cano getting crushed. Let's go ahead and check that out. I don't even know what this Cano health. Isn't there? There's also Canoe or Kazoo? Or maybe there's both Canoe and Kazoo. Was this a SPAC? I think this might have been a SPAC. Yeah, this was a SPAC. Yeah, I mean, that was your first red flag. I'm just kidding. Kind of. I mean, also this thing went up 32% in a day a couple weeks ago, late September, about a month ago, and you just had a big you had that gap filled. I mean, there's got to be news here. Trader deal report that CVS decided against pursuing deal. Okay, so the stock was probably trading up in September off of news with this deal with CVS or speculation about a deal with CVS. Yeah, we go back to that Humana CVS interested. So that's why the stock went up. So when the deal falls through, of course it's going to come down. And speaking of deals falling through, couple deals I want to talk about. We'll start with Twitter Tesla because that's been kind of the hottest one, what most people are talking about. Twitter stock trading at $50.73. So I've been talking about the different kind of the different potential Twitter trades. I think now that it's basically baked in that the deal is going to happen, and you really only have from $50.73 to $54. I was saying when we were at like $48, $47 that, hey, like 12% is 12% in this market, and like that's a good deal. I think there's way more alpha, way more potential return in playing this to the downside now. And here's how I figure. So without Elon Musk buying Twitter for $44 billion which equates to a $54.20 per share price of the buyout, without that deal, I have Twitter's like fair value compared to other social media stocks, Snap, Meta, whatever, at like $21 a share. So more than half, a bigger than 50% depreciation from here. And so, and I think as we've seen both on Elon's side, both on Twitter's side, there have been hiccups to the deal. It hasn't been as cut and dry. Among all this going on, you have in the backdrop Tesla's stock outside of today getting absolutely decimated to the point where Elon's net worth at least his liquid net worth, because I understand a lot of his net worth is baked into SpaceX and some of these private companies, boring company. But for the majority of his liquid net worth is baked into Tesla stock, which at its height was worth more than $200 billion. And as of last Friday, dipped below $90 billion. So if Elon Musk has to primarily sell Tesla stock again, because, or you could sell equity in a lot of Twitter long, Tesla short, going to be trapped soon. I just lost my train of thought. I know we were talking about Twitter. I forget what about Twitter though. So anyway, you have Tesla getting ready to report earnings, the stock getting crushed. Elon Musk's net worth when it comes to Tesla stock. Oh, I remember. So Elon Musk does have equity in SpaceX, right? Which has had these crazy valuations of like $200+ billion. The private side has gotten crushed too, to where a lot of the valuations. I would imagine that SpaceX's. Your theory on the downside? Yeah. So I'd imagine that even SpaceX's valuation would have come down over the last 6 months, a year, with the Fed raising interest rates, and just like across the board, different private tech companies have gotten hit. Although I will say that SpaceX has a lot of government contracts and whatnot, so might make it somewhat more insulated compared to other tech companies. Regardless, Musk has enough money to buy Twitter outright for $45 billion cash and like continue moving on. And then that's not what's going to happen anyway. He's going to find like other investors and financiers to help him. But the bottom line is, when he offered to buy Twitter, it was the company was worth more than it is today, based on valuations of other companies in the space. B, he had a lot more money, so it was, say like 10% of his net worth compared to 30, because it doesn't matter who you are or how much money you have. Once you start talking about a purchase becoming more than 25% of your net worth, like that's a big deal. And it's not something, like a company like Twitter like could very easily depreciate in value just as easily as you can grow it and make it worth more in a few years. Musk is now broken and had to switch to selling perfume. I mean, I don't know. Musk has done a lot of that stuff before. If you guys remember the Tesla shorts he was selling, they've sold Tesla tequila. I didn't really bat an eye at that. Like, I didn't think that was like that weird. I was just like, all right, like Elon's doing Elon things. And hey, look, if they make, I think they said they made $1 million on the first day selling the perfume. Like, if you've got a brand, you've got a brand. And that's one of the most powerful things. Like, if you're like a young person out there and you can build a personal brand, I mean, think about it. If people out there have like 100,000 Twitter followers and they start a newsletter and get 50,000 people to subscribe to that, and they start like a premium one for $1 a month, and then they get 10,000 people to sign up for that. Like, you can, there are a lot of ways I think, like Tesla is being able to use its brand, where it shouldn't really be, like, I don't know. Like, I'd be upset as a shareholder, I guess, of Tesla or something if it seemed like Elon Musk was really allocating resources and time or whatever. But if they're just trying to capitalize on their logo, on their brand, like, hey, so be it. Let's check back in on the overall market. S&P 500 now up. I think we're making highs at day. What was? I'm so confused. I thought Friday we sold off. Oh, we did. This was Friday. Okay. This was Friday. So we're basically just right back to where we were like Thursday morning before CPI. Or no, this was Friday morning. Here was CPI. Big crush down. This was one of the craziest days. I mean, we saw a day where I think we opened down like 2%, came all the way back, Friday gave up like all those gain or not. So we did make a higher low here if we hold this low. Zooming out, and again, this is on a 5-minute chart, so we're only going back to like October 4th on here. I mean, if we take out that pre-market high on Friday morning and come back up here, fill this gap, get above into 370, like above 375. I like it. Like I'm not as bearish out there as people, and I know I'm not. I sound like a broken record right now because I haven't been. Musk perfume is a must for geeks. I mean, hey, yeah, he's got his brand of loyal supporters. Let's go to just regular Benzinga.com. We spend most of the show on Benzinga Pro, but I wanted to check out what our top articles here on Benzinga, on regular Benzinga are. Netflix Q3 earnings preview. Analysts pinpoint key metrics for investors to watch. Nancy Pelosi loses money on 75% of recent trades. Here's where it went wrong. Why the Fed needs to break the labor market to avoid a wage price spiral. Some good articles out there. How are you guys actually? Are you guys actually trading right now? I hope people went in with calls today. Al filed for Chapter 11 on Friday. Isn't wait, is that the one we yeah, the stock's up like 40% today though. This is the one we definitely did some like interviews with Alfie on the channel. They were doing like technology for Uber for like iPads and Ubers or something. I don't know. I mean, in retrospect, like, man, it's probably an easy short. BKKT, please. All right, we can do that. Man, I can't believe Alfie's stock got crushed so hard. I mean, I can believe it. Can't believe like I interviewed the CEO. This now bankrupt company. My interview couldn't change the course of history, I guess. What does this company do again? Digital asset marketplace that enables consumers to buy, sell, and spend digital assets. That sounds all fake to me, by the way. Just by the way. I'm just kidding. I have no clue what they do, though. I still don't know. I just looked at it. Let's look at the chart, though. I mean, all right. Anytime I look at a really ugly chart like this, I try to say something nice about it, right? It's like the ugliest dog at the kennel waiting to get adopted. You got to try to find say something nice or don't say it at all. Something nice about this chart, I will say, is it looks like you've found a bottom here. It looks like you've found 1, 2, 3, 4, 5, a spot you're going to hit 5 times where even if we have dipped below it, it's been very brief and we've gotten back up to it. So that's what I would say nice about the chart. What I'll say, so I think this was one that got swept up in NFT crate. I don't know, November 2021. Yeah, that's when Bitcoin was making like all-time highs, and I think NFTs were popping up above $50, trading below $3 now. Like, there's a reason for that. Most of the time when the market has determined like a $50 stock is now worth $2, there's good reason for it. And unless you've got something, unless you see something, know something, whatever that the market doesn't, like typically you wanna take that as a hint, essentially. I don't know. So I'm not. Out from 30 to 0. Yeah, I mean, I don't know. Honestly, like, there were a lot of companies that went public or that were public in 2020, 2021. Some of them were through SPACs. Some of them were through other ways, but that probably shouldn't have been public companies in the first place. PayPal holdings. I like PayPal long term. I think it all depends on your time frame. I think as far as a swing trade, if you're looking at something to swing for like a couple weeks, a month or so, PayPal is one that is going to be very much impacted by what the Fed's doing, by Fed talk, by macro stuff. But with that said, PayPal's gotten beaten down way more than, say, the overall market or a lot of other stocks. So, for instance, PayPal, I'm just doing the quick math right here, is down still more than 70%. And at one point, closer to 80% when it was down, when it was trading at about $72. But now at around $84, PayPal's still down 74% from its highs. And while that shows me that the market hasn't liked PayPal at all, like over the last year or so since we topped out, actually in like July, so not even November 2021 when a lot of other growth names topped out and Bitcoin was at its highest. PayPal had already started to make it slide. You can see right here. October 2021, if you look at like the SPY, we were like at all-time highs right here. November 2021. Actually, the SPY ended up making new highs in January. But for a lot of growth, like ARKK, like let's pull up ARKK's chart real quick. Oh, wait. No. March 2021 on ARK. Bitcoin? Am I right about this on any front? I thought, yeah, Bitcoin November 2021. I thought a lot of growth topped out. I guess not ARK either. I guess ARK topped out way before that in March. Man, all these things are easy to see in hindsight, in retrospect. But going back to PayPal, either way, the point still stands that while Bitcoin was making new highs in November, PayPal had already started to make it slide. But the flip side of that is that when the market does turn, when we start to get some more bullish sentiment returning, whether that is whether that front runs the Fed's decision to pivot or whether that comes after the Fed pivots, all these stuff, that might mean that the names like PayPal, the names that got beaten down 70+%, but are real companies that are going to be around for a while, might have some better than average returns on the way back, because they had worse than average returns on the way down. So some of those names, PayPal, they are on my watch list, but I'm more interested in them once I do get some more conviction, some more confidence that, okay, now is a good time to start adding to some long positions and some bullish sentiments returning to the market. And it goes both ways, right? I want there to be bullish sentiment returning to the market, in the sense that, I don't want essentially every like bearish headline to be like, oh my God, here's what's going to cause like the market crash or whatever. But once we get too bullish, that's the time you want to start maybe thinking about taking some profits. All right, I see my man Jake Wujastic hanging out backstage. I know he's got to run in a few minutes, so we're gonna have Jake on for about 10 minutes or so. If you've got any charts, anything you want to watch, let us know in the chat. Without further ado, let's go ahead and give Jake our very special Benzinga welcome and bring him on the show. Mr. Wujastic, how you doing today?
Doing well. How are you?
Pretty good. Can't complain, especially on a green day like this. In 2022, it's unheard of.
Yeah, well, just have to wait a day or two and you'll get probably a 2-3% move down. So, yeah, kind of a crazy market. And really the last 3 days have been pretty fascinating to see play out. So definitely some things to watch and kind of keep an eye on, and excited to kind of dive in a little bit.
All right, awesome. Let me go ahead and pull up your charts. Let's see what we're starting with here. Looks like we've got the E-mini S&P futures.
Yep. Yeah. And the reason why I'm using futures right now is, one, we just got futures data on the platform not too long ago. So I now have access to real-time futures. But the other one is just to avoid a lot of these gaps that we're getting on SPY. So ES futures trade, overnight, where you're not having those crazy gaps like you have on SPY. So really, I'm looking at a few different things. One, you're in a very just kind of classic descending triangle here. We have really respected this triangle very well the last 2 days, Thursday and Friday. Today, we're actually trying to break out a little bit. We did have that similar move on Friday, and then we just rejected right at that resistance and closed near the support zone. We opened right at the support zone, and now we're nearing the top of the descending triangle resistance. So, until we make a move down or up, I'm just watching, to see if price action is giving any hints on, the next direction here. A lot of people look at descending triangles generally as 100% bearish. They do have a statistical bearish bias, meaning they have a greater than 50% rate of downside than upside. But when you do have descending triangle breakouts to the upside, they're generally pretty violent and pretty aggressive to the upside. So just going to let price action do its thing. If you're trading within this descending triangle, the last few days have been pretty solid, just to kind of buy the support, sell the resistance, and we're right. We opened at support, we're right at resistance again. So until we actually close above one of these levels, that's kind of what we're just doing. We're literally bouncing back and forth between these two levels. Now, something that's pretty interesting, and I did this on SPY because SPY does have some crazy moves when it does gap, whereas you don't have those gaps as much in the ES. This is a chart that I made last week, and it's really just looking at the times that we've had a red to green reversal over 4.25% range. So you can see here, anytime there's a orange shaded candle here, that means that we had a greater than 4.25% range on the day. And so these generally happen at these important reversal points, at least in the short term. So in January, we had a 4.663% candle. In February, almost exactly a month later, we had a 4.25% range candle. And all of these went from red to green. In May, we had a 4.33%. And then on Thursday, we had a 5.57%. So these are huge ranges, and generally they have marked bottoms. Now, on average, until we've hit a top and then kind of reverse to the downside to hit a new low, on average, that's about 13 trading days. Now, the average isn't a great metric here simply because we only have 3 instances in the past. In January, it took about 7 trading days to top out before the next reversal. In February, it took about 23 trading days. In May, it took about 8 trading days. So we're closer to a short-term bounce or shorter kind of duration bounce than a longer duration. That 23 trading days is kind of skewing the average here to make it 13. But either way, these are just averages. It's just looking at what's happened in the past. From the close on these days, you had a 4.41% continuation up within 7 trading days, 7.66% within 23, 7.13% within 8 trading days. These are all from the close of that big candle. And so if we were to take the average, the average is about 13 trading days with 6.4% move to the upside. And that's just an average. But it is interesting to see that aligns almost perfectly when the Fed and a lot of big earnings are coming out in late October, early November. So we'll see what happens. So far, it's just kind of one of those things that that's all it is it's a data point. It's an average, not trying to call the bottom, just saying, hey, last time we had this type of a move, this is what happened. So this would definitely be more on the bull case. On the bear case, the bear case is simply the gap below. So you have 2 gaps, and I think, one of these two are going to definitely be a magnet for price in the coming weeks until we maybe get some Fed reiteration of what they're doing. So the main gap that you have here is you have a gap above that fills around 408. You have a gap below that fills around 338.25. Now, notice here on SPY, you don't necessarily have that descending triangle like you did on ES. And that's because we gapped way down here, whereas ES opens a lot earlier than SPY. So you had more of a wick. So, it's one of those things where just depending on what chart you're looking at, I think ES is probably the one to be looking at. There's just a lot more liquidity there. There's just a lot more prices respect these levels a lot more on futures. But yeah, very interesting kind of 3-day price action here, and we'll see what happens. But one thing that's kind of changed quite a bit is Bitcoin. Almost every time I come on here, I bring up Bitcoin and I say, hey, this is a great proxy to get an idea of, risk on or risk off in the market. And, Bitcoin has pretty much just stayed flat. The June lows have held, whereas a lot of the June lows for the broad markets have not. And we're kind of getting right to the apex of this larger descending triangle, pretty much starting back from March of 2022. And you can see we're right at the end here. If we break to the upside, you do have quite a bit of resistance that's acted pretty much almost as a horizontal level of resistance, because this VWAP from August 15th is pretty much flattening out now. And the reason it's flattening out is because price action has been flat. But yeah, if we do break out, I could see, 20,075, let's just call it like 20,100 up to around 20,250. And then if we break above that, that's when things get interesting. But for now, we are still in this descending triangle, the apex of it. And the next few days should definitely be very interesting and telling for where we may be going, at least in the next week or two. But your main level that you want to break to the upside for the bull case would definitely be this VWAP from August 15th. And if we break above, let's say 20,250, I do think there's probably some further upside possible for this one and the broad markets. I mean, if Bitcoin's starting to break out, I can't see the broad markets going the opposite way. But we'll see.
Yeah, I mean, I think right now, like you mentioned with Bitcoin, it's just a good measure of it is risk. Are people going risk on or risk off? And I think, like you said, we'll be watching this VWAP line right now. A lot of people were pointing to earnings as potentially being that next catalyst for either driving us the next leg lower or potentially, higher. So we're going to see some other earnings reports coming this week that will probably be pretty telling, but between Netflix tomorrow, Tesla Wednesday. So, I mean, all these things, like you said, we're just going to have to watch over the next week or so, see if we clear into these key levels. And then outside of that, it's going to be more macro driven, Fed, all the same stuff, all the same things we've been talking about.
Yeah, and I've seen so many people just so sure of themselves on both sides, right? So sure that we're going to continue down, so sure that this is a bottom. And those people, I just immediately just completely disregard anything they're saying after that, because that is, that's not how you should look at the markets. You should always know what is the bull case, what's the bear case, because if you don't, then you already have a bias. You're a one-sided bias if you can't see the other side. So clearly the bear case here is a breakdown of this descending triangle to the downside, breaking those lows from June. And then that bull case is the descending triangle breakout to the upside. And really, the descending triangle breakout is important, but I really would like to get above that VWAP, because you can see here September 27th, 30th, 4th of October, 5th of October, 6th of October, all areas where we just got smacked down right at that VWAP. So this is a very important level because it has proven itself to be an important level over the last several weeks. But yeah, it's just this is a market where you have to be flexible. What happens if earnings come out and the earnings are horrible, and forward-looking earnings or just the comments on forward-looking events are horrible too? That could in itself change how the Fed is looking at things. Simply because they're like, okay, we've already kind of put a dent in the economy. Maybe we pull back a little bit. I don't think they will. But we'll see. But I do think there is a lot of bad news priced into the markets. I think the market already has an idea of like, okay, 1.25% more rate hikes into the end of the year. So I think that could be already priced in. But at the same time, let price action do its thing, and let this evolve. And if you're a day trader, then you probably don't care about what the Fed's going to do in a few weeks. You're just taking it today. what's price action doing today? What are your levels? If you're a swing trader, you're probably more focused on the next couple weeks. So it really just depends on your time frame and what you're trading, and the personality of what you're trading. Tesla, for example, has a lot bigger moves than Apple or Microsoft for the most part. So if you're trading Tesla, be prepared to have a margin of error around some of your levels of 1% to 2%, where you may not need that for Apple if you're looking at that chart. So
100%. Yeah. And if you're a day trader and you're probably liking this extra volatility and having days, I think the day we got the CPI report last week when we opened down like 2% on the SPY and ended up closing up like 2% was one of the biggest intraday moves for the SPY that we've had in the last like 2-3 years. So if you're a day trader, like there's a chance you're loving this volatility. It can be difficult because you never know, really. There's no trends holding, and it seems like the market's going up one day, down the next day, just giving up gains, getting them right back. But I think that volatility, a lot of people are liking it right now.
Yeah, and I think if you are someone that's trying to look at the longer term or maybe medium term view of the market, weeks to months, just turn on your moving averages. I mean, look at the moving averages. The 50 and the 20 are starting to flatten out. The 200 is definitely still declining. But if you want to get an idea of trend and where trend is, this is pretty much right out of the CMT textbook, and something that is iterated by Brian Shannon all the time, and really a lot of technicians, is just look at the moving averages. If they're declining, then you're still in a downward trend. If they're flattening out, we're starting to potentially form a bottom. But just look at the moving averages, the 20, the 200, the 50. Those are definitely going to be a guide, at least for trend. A lot of people like to use moving averages as potential resistance or support, but the pros are using them as gauges of trend. Are we in an uptrend? Are we in a downtrend? Is the moving average flatlining? Most people don't want to trade in a market that has essentially flat moving averages because there's no real defined trend. So just know what you're trading and know your time frame, and everyone's going to have a slightly different way that they're trading this market.
100%. Well, Jake, I know you got to run today, so I appreciate you hopping on, taking time out of your busy Monday to join us. Folks, if you want more from TrendSpider, visit that website. Use the code BZ25 to get 25% off. Jake, enjoy the rest of your Monday and have a great week, man.
Hey, thanks, man, for having me on. We'll see you next time.
Of course. All right, guys, that was Jake Wujastic. I'll go ahead and drop his Twitter in there as well. Again, go visit TrendSpider if you want some more from the awesome folks over there. Can't speak highly enough of Jake and his good buddy Dan over there at TrendSpider. All right. I do see our next guest hanging out backstage. Let's go ahead and give him our very special introduction as well, and we'll bring him on, see what he's been trading. Without further ado, mystery guest.
Did you butcher my name or did you hiccup?
I said mystery guest. Come on.
You said Mr. Oh, mystery guest. Got it. I was like, what the hell did he just call me? What's up?
I don't know. The market.
Yes, that's a great answer. That's exactly what I expected. The market is up, but the question is, do we continue grinding higher?
It sure looks like it. Sure
I don't know. That 368 is key. Got to break above that 368. I'm currently short Google, but it's looking like an L trade, man.
Yeah, that's what I'm worried about on a day like today, where the market's been so shitty, and like you see the S&P 500 up 2.6%.
Yeah.
Like I think about, all right, my like small brain thought process is like, oh, I should buy some puts, and I'm like, you know what? That's probably what everyone's gonna freaking do today. Like, what if I bought calls on a day we're already up 2.5%?
Yeah.
And then it's like, all right, that seems stupid also. So then I get tripped out thinking about like, should I do what I initially thought was stupid? Because if I try to get smart and do the opposite, then that's also stupid.
Yeah. No, I agree. I agree the dilemma you're dealing with, but it's just tough, man.
How could you possibly listen to all that and say you agree?
Because I agree in the sense of like, that's exactly the same type of thought process I would have. And that's why it's difficult to trade this market, especially because my thought process is we've already gapped up. So everyone's looking.
No, Shelly, this is
What?
not the, oh my God, is this the Zunaid and AB finding a date show? I do not need any help finding a date. Thank you very much. Although, with that being said, if you know any woman in the Detroit metro area, aged, I don't know, 22 to 30, that might be willing to go on a date with me, I'd be willing to. Not because I need help finding a date, just
Yeah.
because, just throwing it out there.
Yeah, no, of course not.
Bam Ridden, I don't know if you're still in there in the chat. You want to put 500 in bi-weekly. You want to go all in on Tesla, but I should also buy a VTI. I wouldn't say you have to buy VTI. So VTI is Vanguard's total stock market ETF. And it's basically as far as like ETFs and stocks, it's like as diversified as you can get because it's small caps, large cap. It's literally everything. With that said, like I do think there is, so Charlie Munger, who's Warren Buffett's right-hand man, has a saying where he's like, he calls diversification diversification. Basically, if you have like a good handful of stocks, why throw in a bunch of shitty stocks too?
Yeah.
And I do think with VTI, you'll get a little bit more muted returns. I would, though, if I were you, Bam Ridden, instead of, putting it either in all Tesla and you could do a little bit in Tesla and a little bit in VTI, and that way have a diversified portfolio. But go through Vanguard and other companies like ETF offerings and see if there's one that fits your, what you're looking for. Like for me, I'm looking at a lot of these, like Vanguard has a small cap growth ETF where it's like, usually I wouldn't be looking at it, but because small caps have gotten, and growth, like small caps and growth have gotten hit so hard that if that fund is down like 50%, I might expect a little bit better returns from it over the next year compared to some of the others. But VTI, VU growth, that's one that I've bought before. That's basically like the S&P 500 index, but more growth oriented. So higher weighting to the growth companies. I don't know. I'm not financial advice, but I would recommend doing something like that instead of just buying Tesla.
Well, look, you're not certified to give financial advice, but what about dating advice? Where's the first spot you're taking someone in the Metro Detroit area, AB?
I don't know. So here's the thing: is like, I guess it depends on on like the situation, the woman. I feel like you can't go too nice, like first date. Like you don't want to go. There's a place right near your office, Prime and Proper. That's like you're spending like 200 easy, and wait, no, Shelly's saying I'd say my room. No, I wouldn't say that. I would say like I would just try to find a nicer, like bar. You know what I'm saying? Like a place where you probably spend like $20 a meal, not 50, but not $5 either.
8 Mile is a good suggestion.
Lafayette, Coney Island, dude. I think that place got shut down. I think they had a rat infestation, like legitimately.
Yikes. That's not good.
No, not good at all. I was there, like I literally saw that news headline and was like, oh, I was there two days before.
I am short though. Like I said, Google, I'm probably going to get stopped out, but I am also long ATXI. I'm long at, let me see where I'm long. Probably a terrible fill. 533. So I'm literally 3 cents in the money. That's about it. Nothing too crazy to write home about. I don't know why I talk like that, but we'll see if that comes crashing down.
Back to the date question. Any restaurant where, like I said, like it would be like a $20 to $25 meal. You throw in a couple drinks too. Probably looking at $100 tab.
Yeah,
when it's all
solid.
said and done.
Solid.
Right. And then that way they're like, all right, they're not cheap. But again, if you set the bar too high on the first day, like that's like, all right, you're putting yourself in a bad position if you take someone out to like a super nice meal on the first day. Also, it's kind of like, I think that's kind of like a desperate move.
Yeah, it could be. Again, it depends on, like for example, I had this one woman I was dating. She had just gotten a promotion at work, and I was like, cool, like let's go celebrate that. And that first date would have been more so a celebration of her promotion, and that would have been worthy of a really nice date out, right? Steaks, things like that. So it also depends on the situation as well and how you want to play it, because now when he or she, obviously in this case it was a she for me, but depending on what you got going on, they're thinking about you when they're thinking about that promotion and how they celebrated it and XYZ. So you're planting the seeds and the memories. You're investing in the memories is what I'm trying to say. Look at that. We're all investors. But yeah, it's like, dude, we throw options, $100 here and there. It's like, it's cool. It's nice to spend it on someone worthy of it. But I'm going to go share my charts here. Just so we can take a look at what I'm looking at. And I did talk to TradeStation. Looks like my funds should clear tomorrow. And here we go, though, on ATXI as we're moving on up to the upside. Here's a situation. I did go ahead and go long. I tried to sell at 369 because LOL did not hit the limit. So then I got stopped out when it cracked below VWAP, but I got right back in when it came up above VWAP. And now we'll see if I can get my hit on 369. Will the first restaurant take you to the friend zone? Will the first restaurant take you to the friend zone?
I also was trying to figure out what that means. I have no clue.
I assume it's like, hey, if you go too cheap, like an Applebee's, will that just be a bad taste? In my opinion, yes. But again, if that's what you've got, then, you know, you better be funny as hell and charming. Because that triple chocolate meltdown is only going to do so much, especially if she's lactose intolerant. Dating's fun, though. Dating's fun. Those dopamine hits. Now, the rejection always sucks.
Yeah, facts. Let's see.
Okay, so here's the thing. I'm sorry. Look, and we'll move on from this dating topic because anytime I come on, we always get off base. I thought women wanted, I assume they meant equality. Why aren't they paying? Here's the thing. Just because they want equality doesn't mean that we can't treat them to a nice meal, right? It's like chivalry doesn't need to be dead just because they want equality. You can still treat them somewhere nice and, you know, set the bar high of like, hey, you're enjoying their company. You want to be in their presence, so you're taking them out. Simple. I don't know. That's my thought process. Now, does it mean that every single date you should be paying? You two should be able to kind of figure that out. That's not for me to say. That's for you two to figure out. But to me, if you're on the first date, pull out the card, gentlemen. Pull out the card. And don't pay with a debit card. I'm judging you if you pay with a debit card.
Yeah, that is weird.
Unless, of course, you've got credit problems, then, like, I'm sorry. That sucks. I hope you get out of it. But otherwise, stop paying with a debit card. Is it wrong that I like to swing trade my dating life? Probably because you're in the red, similar to your portfolio.
Aw?
What was that sound effect?
That's what I,
Aw?
Aw?
Zaid, you might be able to answer. Yeah, I got you. You might be able to answer the question on how to get the expected move on a stock using the options change. So are you help clarify this question for me?
Like expected move into earnings.
Oh, yeah. Isn't it you take and look, it's been a minute since I've played earnings because that's how I could only take women to Applebee's instead of somewhere nicer like Panda Express. I'm joking. But to me, it's you just calculate the options price from at the money. So if you have a stock trading at $100 and the at the money puts are 5 and at the money calls are 5, you've got a 5-point move in either direction. That's how I calculate it. I'm sure, matter of fact, I'm sure there's a calculator out there, but that's how I've expected to calculate expected moves.
And again, I think certain brokerages, like I know Thinkorswim, TD Ameritrade gives it to you automatically. OP saying, what's wrong with the debit card? I feel like, I don't know what it is.
You can take this one and I'll answer later.
Yeah, well, you probably have your own reasons, but for after a certain age, like you should have a credit card and you shouldn't just spend, like if you go out to a restaurant and you're going to spend $50 on the bill, you're better off spending it on your credit card, paying $50 off on that credit card than just paying just $50 out of your debit card. I don't know. Like I remember like my friend who were like mid-20s now, like 25, like went out and like was paying with shit for his debit card. And I was just like, what are you doing? Like, you don't have a credit card? And he was like, no, like, why would I need one? And then I explained it to him and he was like, oh yeah, shit, I should get a credit card.
The richest people in the world don't make money using their own. They use it by using someone else's. That does not mean you make an advance to cash to whatever purchase with your credit card. No, but I'm just saying you want to go ahead and utilize cash flow, right? So for example, if I swipe a $10,000 purchase on my credit card, I don't owe that $10,000 till the end of the month at the minimum, right? If you're smart about it, you may not owe it for about another 58 days, which is like 2 months. So that's one thing. 2, if your information gets stolen on a debit card, it's a lot harder to recover those funds than a credit card. You have less protection there from what I understand. 3, you want to go ahead and calculate how many miles and points and all that other good stuff you can get using a credit card, which will pay for your travel and those nice meals and purchases and things like that. I've been a credit card I'm not going to use that word. I've been a credit card enthusiast for many, many years now. And, I pay for all my travel through my points. That's all it is. My parents went to LA for a wedding, paid all with points. I didn't have to pay anything except, there's like a 9/11 security fee. So thanks, Osama, for that one. But besides that, I pay everything through points. So highly, highly recommend credit cards. They're a nice little.
I did learn the other day. I
I
was reading about it the other day where I didn't realize this, but for like, I guess wealthier, like well-to-do people, credit cards are great, and they are able, like you said, you get a lot of free shit from like travel, points, all this stuff, cashback rewards or whatever. But because of credit cards, like how it actually works when you like buy something from a store, there's a 3% fee that goes back to the credit card company. So what ends up happening is that, like, say average convenience stores like a Walgreens or CVS will end up having to make things like 2 to 3% more expensive to match that 3% fee that's going to the credit cards. And then like poor people that don't have credit cards end up having to pay more for those goods. And then people that are like well-to-do get the free travel points in return. Like basically it's like an added tax on the whole credit card reward system, is like an added tax on like the ultra poor people.
Yeah, and I get that, and that's tough, and that's unfortunately why in this world I believe the rich will continue getting richer, and the poor, unfortunately, will continue to have many, many challenges if they want to make it out of their circumstance, for the lack of better words. But like even if you go to a gas station, for those of you may not know, if you go to a gas station, if you pay cash, you're paying about 10 cents less than if you pay with a card. So fun little fact there, if you weren't aware of that. So yeah, I mean,
so
it is
it's
tough,
like,
but
yeah, and then it's like if you have both options where you have cash, but you also have a credit card that gives you 3 times points back at gas stations, like you have to do that math on your own and figure out like, am I saving more doing 10 cents off using cash, or am I saving more using my credit card and getting more travel point? It's like all this thing, it makes it really hard. I do think for the point stands, if you have enough money, especially to be paying your credit card off every month and stuff, and you'll never have to carry over a balance where you have to pay interest on it, like it's a no-brainer to use your credit card for purchases, like Zunaid said, for multiple reasons. If you're trading or investing, like think about it that way. If you have $5,000 worth of purchases and you make it on a credit card, and then have that $5,000 in an account and are able to make 10% on it, make $500, like that makes a difference rather than not having that $5,000. And a credit card enables you to do that.
I don't know how a firm works, but yeah, I know that's something that a lot of people have used to pay for purchases, but haven't been able to pay back. But hence why.
Wait, you don't have to pay back Affirm loans? What about Upstart loans? You have to pay back Upstart loans?
Well, here's the thing, my friend. Affirm had a high of 180s. And now they're trading at about $19. 90% almost. Almost a 90% decrease in Affirm holdings.
Oh, Bamrin's asking the real questions.
Where's my credit card?
I have a few. I have an
Good.
American Express Delta one. I have a Cash Rewards Bank of America one. That was like the first, because Bank of America is just my bank, so that was like my first starter credit card I got when I was like 19 or 20. I think I started with like a credit limit of like $800. Now it's up to like $10,000 after like 7 years of just paying it off every single month. And then I have an Apple card. And yeah, that's it.
UPST, look at this. $400 to $23, bro. 94% of your portfolio, if you held only this, is in the red. That is insane.
I'd want to find a guy whose portfolio was literally only Upstart stock, and then I'll not feel bad for them in the slightest, because I'll be like, you are literally the dumbest person I've ever met. Sorry if that's you out there.
No,
I'm
our
actually not
viewers
sorry.
are smarter than that. But damn,
I don't
bro.
know. I don't know. I talked to
Hey,
someone
whoa.
I talked to someone who had like 100% of their portfolio in Fubo.
I mean, they might have done well depending on when they got out. By the way, we lost 6 viewers since we started talking about our dating life. But
That's fine.
you know, FUBU, you know, to
Let
the
them be.
upside.
They'll never
Achieve love.
Yeah, they'll stay in their mom's basements forever.
Oh, dude, we didn't mention the most obvious one. Yes, you want to use credit cards to build up your credit score so you can buy a house, a car, a business. All these
trying to get a-
things. The world works on credit, people. The world works on credit.
Isn't that like a Donald Trump quote where he's like, if you take out a $10 million loan, it's your problem. If you take out a $100 million loan, it's a bank's problem or some shit like that. Someone will correct me in the chat.
Yeah. All I know is if God forbid I ever get hit with a bad disease that's going to kill me, I'm getting a loan. I'm living it up.
Yeah, how does that work? How does it work? I've been wondering this, but I didn't really want to ask and sound stupid. Like, how does it work in something like the Alex Jones case where he's ordered to pay $1 billion but doesn't have $1 billion? Like, I
assume it's like earnings garnished in the future or some type of shit.
Yeah, like anything he makes, he has to give to them. But my thing is if he doesn't end up making that, are they still owed that money from some like outside entity, or did they just pick some arbitrary number that they were like, yeah, like if Alex Jones drops dead tomorrow, is someone gonna pay that, or are they just like, oh well, he died owing us, $500 million?
I assume, and look, I'm not an expert in this, but I would assume it's like, hey, cool, what assets does he own? And then there's probably a priority list of who gets paid what. Similar to like in a bankruptcy case in a company, you have some stakeholders that get paid before the others, right? So you'll have like an estate that's billed for Alex Jones, and before any of the money is given to anyone with inheritance that they're expecting, maybe someone else gets paid out. That's what I assume.
Yeah,
but of course, we're not saying anyone needs to die. We're just having.
I'm saying if he did die and his estate gets distributed out, and it doesn't equal $1 billion in assets. So say there's $250 million left over from that billion they're owed. Is that just forgiven? And like that would be a reasonable thing. That's just what I'm curious about.
So.
Or is there some like entity that steps in and is like,
I don't think there's any entity that steps in. Or else that could be a huge credit card. I mean, that could be a huge scam that people would end up just abusing, in my opinion. But no, from what I understand, there's no.
So yeah, if you died while you had a loan out in your name, it wouldn't like go to your family or something. You would just be chilling.
It depends on the type of loan, and it depends on if there are other assets that your family is getting. But taking a look back at this trade, though, because I promise, right? We talk about stocks, but we talk about nonsense as well while we're losing money. Still in this ATXI trade, I'm looking to go ahead and achieve 69s here to go ahead and sell. I am currently in at 53s. Matter of fact, I'll just do this since I'm going to have myself boop. We're looking to sell at 69s, and our stop loss is going to be that right there. Is my risk reward okay? Yeah, my risk reward is great. I'm already in the trade, but yeah. I think my trade. Look at that. Risk reward is 1.23. That's what I'm talking about, man. But let's go though. We gotta. Here, this is a little too. It's a little too bright. Let's bring this puppy down to like 42. There we go. We're in the trade, you guys. We're in the trade. Let's see if we make money or if we're going to lose money. As you can see, my Google is still in this good old consolidation, not doing anything in life. Yeah,
we all
go to
need
your
some
estate.
consolidation.
But then it's yeah. What are you consolidating in life?
I don't know. Fucking look at this. Look at Tesla just breaking out, making new highs.
Yeah, it's at like 222. Yeah, 222. We played Tesla. Did we play Tesla? Yeah, we played Tesla in the morning at that 215 to go short.
222 really means that Tesla's at 666 because of the 3-to-1 split.
Yeah, but what about even before that split?
I don't know. I'm just saying 666. That's the devil's number. Does that make us short or long?
That's actually the tattoo I have right in the middle of my chest.
The 666.
Mm-hmm.
If you look at it the other way down, it'll be 999, like a angel number.
Yeah.
So that's why when you look down on it, you see an angel number, but other people see 666. So you can always say, like, you know, you never judge a book by the cover. You'd see me, you'd think I'm some like Satanist, but then really,
I like
I'm looking
that. AB, I like that. Love
like
the
that?
thought process.
Yeah.
I also didn't know 999 was the angel's number, so
I don't know.
that's dumb on my part.
I honestly don't really.
Well, you just made that up?
No, I think it is, but I think there's also like people talk about angel numbers and they're like, yeah, 444, 1111, 999.
So I have heard that, where it's like, because
every repeating number is an angel.
So I often see the numbers. I always see the clock usually at 12:34, and then a friend of mine was like, yeah, like those are the angels watching you, and I'm like, well, then why does my life suck? I don't understand.
You were on the show during 12:34 today.
Wait, shut up! No way.
Yeah.
I'm telling you, dude. The angels.
Yeah, man.
They need to bless me. By the way, we're 4 cents away from our first targets in ATXI. I wonder if TradingView, does this let you do 2 targets or just 1? I think it's just 1.
I thought you were gonna say AT&T. I was gonna say it'd be a weird stock to trade. Although,
bro, I am not trading AT&T.
Although, stock's been freaking crushed. Could get interesting. Nice little divvy. Nice little divvy on T. On ticker T.
Ooh, you've got a AGFY setting up a little bit here. Let's see what we got. Are we going to take another trade, chat? Matter of fact, you know what, bro? I've got $1,000 in this account. I'm pretty sure.
Woo!
Can I just buy it? Can I just go all in?
Little rich Zunade over here got $1,000.
Bro, I'm about to go all in,
make some
bro.
trades.
I can get what, 500 shares here? Market this thing? Did it go through? Oh, order executed?
I'm about to call. Shit. I'm about to buy calls on Baba.
Bro, I'm in this trade. We about to make money or lose. I don't know yet, but
I'm buying June 21st, 2024, $195 Baba calls.
All right, let's do it. Let's both lose some money.
No, I'm not actually.
Oh shoot! Look at this. I'm about to lose $50 in a matter of minutes.
No way, bro. No.
Oh shoot, dude, that was scary.
Unusual Whales tweeted, a U.S. recession is effectively certain in the next 12 months, per new Bloomberg economics model projections. Here's the thing. People might read that and say bearish. I'm thinking about that like, oh, if a recession's imminent, that means the Fed's going to have to cut rates. Bullish. It's all about how you spin zone things. So
I suck at macros.
Thought you don't have tattoos.
I don't. I was kidding. I have. I'll be honest though. I have thought about getting 666 tattooed across my chest. But I'm talking serious in the sense of like 2% serious, not actually serious. For me, it's kind of like I've always been mischievous and like a rebel, if you will.
How big would it be? Like all across your chest, or would it be like
no? It'd be like the middle of my ribs, like right here. Boop. You can't see it because of my name, but like, you know,
because of your rolls. You said what?
Because of my name right there, made in India. You can't see it.
I thought you said it was gonna be in your rib cage, and you would have like rolls, so they'd be like folded.
No,
over the
bro,
tattoo
it'd be like right here, like right there, just 666. You know. Yeah,
I'm gonna advise against that.
I
can't give you financial advice. I can give you tattoo advice, and I'm just gonna say it's not a good idea. It honestly would probably limit your dating pool. Like
it would. Imagine you're connecting with somebody, and then they see that, and they're like, I'm sorry, what? Yeah. No amount of jokes and charm would be able to get me out of that situation.
Yeah, you'd be like, yeah, it was a joke. And they'd be like, all right, well, our sense of humor don't align. Have a good one.
Yeah, I know. I'm not going to get that tattooed. I think what I'm actually going to get tattooed at the end of the year is life
Benzinga.
Is beautiful. I would need a good amount of money if Benzinga wanted me to tap myself up there.
For reals. All right, guys. 12:28. Shout out Zunade for hopping on the show with us to shoot the shit, talk about some trades. Shout out to Jake Wojasik from TrendSpider. Shout out to everyone who made this possible today. Smash the like if you have not already. Beautiful Monday show. We'll be back tomorrow. Got a busy week full of earnings, Netflix, Tesla, you name it. We'll be streaming the earnings live here on Benzinga. So again, smash the like if you have not already. Go ahead and give Zunaid a follow on Twitter. Give me a follow while you're at it at AaronBrief5. Yeah, hood's up. I don't know. Hood's up. Oh, for Zunaid. I don't have a hood, but I would throw a hood up if I had one.
We should. Next time we do a show together, we should both have hoodies. Come on.
Money Mitch starting up. Sorry, I mean, you want me to acknowledge that?
That's okay.
Okay.
Wait, acknowledge what? Oh, the hood's up?
Hood's up? Yeah, I could bring in a hoodie. I don't have any, like...
Do we have Benzinga hoodies? I don't know if we have Benzinga hoodies.
We do have Benzinga hoodies. Well, actually, I don't know. Yeah, the zip-up ones.
You never sent me my care package, by the way. I'm still mad at you.
I'll have to... That got lost in the mail. All right, guys. Money Mitch is about to start up right now. He'll have Sean Cruz... wait, let me make sure. Yeah, he'll have Sean Cruz, head trading strategist at TD Ameritrade, as well as Matt Venturi, the founder of Clearing Bid. So a couple of big interviews for Mitch coming up. This stream will automatically redirect you. Other than that, stick around for pre-market prep at the close. We'll be back tomorrow. Benzinga live trading, pre-market prep, you name it. Till then, stay green. Love you guys. Smash the like. See you tomorrow.
Bye.
Bye.